What's next for the economy? What all to watch out for in 2023? Recession 2023? Inflation? Layoffs? The 2022 economy was a jumble of flip-flopping growth, decades-high inflation, and fears that a steep slowdown could plunge the country into recession. But big questions remain, and economists say we're in for an even more fraught guessing game in 2023. The Federal Reserve has been aggressively trying to slow the economy enough to cool inflation. That appears to be working so far. But there are concerns that the economy, and especially the job market, could slow too quickly in the coming months, setting off a recession. Major institutions remain divided on whether a downturn is imminent. Banks offer a range of scenarios, from predicting that the economy just skirts a recession to saying one is very likely to begin in the first half of 2023. I don't think anyone knows whether we're going to have a recession or not, and if we do, whether it's going to be a deep one or not. Fed Chair Jerome Powell said at a news conference last month, "It's not knowable. Here, in 10 charts, is what we do know about the economy today." Hey there, welcome back to Finance Insights. In this episode, let's explore all the things that are going to impact every household in 2023. So don't miss watching this very important video till the end before you plan your personal finance in 2023. Number 1. Inflation. Inflation is slowing. Price increases, though still elevated, are beginning to come down. Americans are finally beginning to feel relief after months of rapidly rising prices on basics such as food, fuel, and rent. Overall inflation has fallen for 5 straight months and is expected to continue its descent in 2023. A number of goods, including bacon, donuts, and potatoes, have actually gotten cheaper in recent months, as pandemic-related product shortages and transportation tangles have gotten sorted out. Larger expenses such as utilities, healthcare, and airline tickets have also become more affordable. Number 2. Gasoline prices. Gas prices are coming back down from the summer's all-time highs. Meanwhile, average gasoline prices, which peaked at about $5 a gallon nationally this summer, have retreated from record highs, thanks in part to a decline in global demand. Number 3. Borrowing costs. We expect higher borrowing costs for homes, cars, and credit cards. But the easing of inflation is just one part of the picture. In its effort to combat skyrocketing prices, the Fed has raised interest rates 7 times in the past year. Although the central bank controls just one interest rate, the federal funds rate, which banks use to lend money to each other overnight, its actions have an almost immediate impact on all types of lending, including mortgages, car loans, and credit card rates, all of which are getting costlier. Number 4. Home sales. Home sales are falling sharply. The run-up in borrowing costs, including a doubling in mortgage rates, has had a chilling effect on the housing market. Home sales have fallen for 11 straight months, and construction of new single-family homes is at its lowest level since May 2020, when much of the country was shut down. There are also signs that rapidly soaring home prices have stabilized in many parts of the country, a trend that economists expect to continue in the coming months. Number 5. Manufacturing. U.S. manufacturing is shrinking. It isn't just the housing market that's in free fall. Americans are spending less on other big-ticket items too, such as furniture, cars, and appliances that were in high demand early in the pandemic. As a result, U.S. manufacturing, considered an early indicator of where the economy is headed, has been on a steadily downward path. This video is brought to you by Code Academy. When someone hears the term tech skills, coding, and computer programming are often the first things that come to mind. Knowing how to code is a rock-solid skill foundation for any kind of tech career and a huge supplement to any career skill set. Really. But coding is a pretty nebulous term. There are a lot of coding languages out there, and if you're new tech, where and how should you even start? Code Academy is here to help you. Getting started is simple, and it's totally free to start. Code Academy will give you everything you need to learn to code. Starting is easy. They'll help you write your first line of code in minutes. Learn the technical skills to get the job you want and stay recession-proof. Use the link in the description to get an exclusive 50% discount on the Pro plan. Number 6. Job market. The red-hot job market is gradually cooling. The job market has for months been a bright spot in the economy. The unemployment rate of 3.7% remains near historic lows, and many employers say they're still desperate to find and keep workers. Importantly, there hasn't been a meaningful rise in layoffs even as hiring has slowed. However, economists warn that the labor market is likely to get shakier in 2023 as the Fed's tightening works its way across the economy. Barclays, for example, expects the unemployment rate to rise to about 5% next year, which would translate to more than 1 million job losses. "We believe that's what would be needed to bring inflation down," said Mark Giannoni, the bank's chief U.S. economist. "We have a very resilient economy and a strong labor market, but we expect things will slow." Number 7. Personal savings. Americans are saving less. The personal savings rate is markedly lower than it was early in the pandemic. The good news is that most Americans have remained employed and even gotten raises in the past year. But a lot of those wage gains have been obscured by persistent inflation, which has cut into families' budgets and made it difficult to keep up with basic expenses like groceries, rent, and utilities. As a result, more people are dipping into their savings accounts without replenishing them. The personal savings rate, which rose to an eye-popping 34% at the beginning of the pandemic, when many families benefited from government stimulus checks, has fallen dramatically in recent months. Number 8. Stock market. The stock market is cooling after months of torrid growth. It isn't just personal savings accounts that have taken a hit in the past year. The stock market, which rose to meteoric highs in January, spent the rest of the year on rocky terrain. High-flying tech stocks that soared during the pandemic have seen some of the largest declines in recent months. Shares of Facebook's parent company Meta have plunged nearly 70% in the past year, while shares of Amazon are down 55%. Amazon founder Jeff Bezos owns The Washington Post. Overall, the S&P 500 index has lost 20% of its value from a year ago, wiping out trillions in investments. Number 9. Gross domestic product. The U.S. economy is growing again after a 6-month slump. More broadly, the U.S. economy has rebounded after unexpectedly shrinking in early 2022. An increase in government spending and a narrowing trade gap, with American retailers importing less and exporting more, helped the gross domestic product late in the year. But economists warn that those gains could be short-lived as major chunks of the economy, including housing and consumer spending, continue to moderate. The irony is, we're seeing the strongest growth of the year when things are actually slowing, Diane Swunk, chief economist at KPMG, said in October. After the third quarter GDP results, there are some real cracks in the foundation. Housing is contracting, the consumer is slowing, GDP is growing, but not for all of the right reasons. Number 10. Recession forecasting. All the major banks are divided into 2023 recession calls. Here's what the top banks around the world predict about the recession 2023. JP Morgan predicts a mild recession beginning late in the year. The bank economists expect U.S. economic growth to slow. Goldman Sachs, on the other hand, says the U.S. will narrowly avoid a recession. There is a 35% chance of a U.S. downturn in 2023, bank economists say. Bank of America said that the world will see a mild recession, likely beginning in the first half of the year. An economic downturn is all but inevitable in the United States and Europe, the bank says in a recent report. Meanwhile, Morgan Stanley says the world is in no recession at all. Bank economists expect that the U.S. just skirts a downturn, though the labor market is likely to take a hit. But Barclays is viewing a shallow recession beginning in the spring. The bank recently pushed back its forecast by 1 quarter and now expects a downturn starting in the second quarter. Wells Fargo, too, is eyeing a modest recession beginning midway through the year. The bank says many foreign economies will also face a recession in 2023. So what's next for the economy? Economists aren't quite sure. There's no question that we're in for more of a cool down, though it's unclear how rapidly or dramatically that might happen. The Fed is hoping to slow the economy in a gradual and controlled way, though many experts agree that things could quickly spiral down, possibly leading to a recession. Current forecasts vary considerably, though several major U.S. banks still say it's possible, if not expected, that the U.S. economy will contract at some point in the new year. Our recession probability models have moved to uncomfortably high levels, Morgan Stanley economists wrote in a recent report. Tighter financial conditions and market volatility suggest a recession in the next 12 months is a coin toss. What do you think the 2023 economy is gonna be like? Share it in the comments below. We'd love to hear your thoughts. Well, that's all in today's video. Hope you'll find these helpful. Drop us a like if you did. Thank you so much for watching. We'll see you in the next one.